Hello and welcome to Insane Finance, where the stakes are really high. We're trading real stocks with real money, and this is not financial advice. Don't copy my trades. I don't want you to lose your money the way I lose money. I'll make money. I hope you make money, but this is for entertainment purposes, and there will be losses and gains. Today, we're going to be talking about the Tesla earnings report. We're going to go over Barron's article about the Tesla earnings report. We're going to go over my thoughts about the Tesla earnings report, and let's get into it. So right now, we're sitting at almost noon, and first thing you need to know is that the Tesla earnings report is due to be released tonight in the after hours. And there will still be some trading in the after hours, so I don't know exactly what time the report is going out. Maybe we'll find out when we're going over this Barron's article. I have not read the whole article. I went over the first couple of paragraphs. There seems to be a lot of really juicy information in here. Keep in mind, though, that we have, and I'm going to make a whole nother video about these negative catalysts. We have a whole bunch of negative catalysts overshadowing and pushing down the whole stock market right now. And we have recent declines in the Tesla stock itself. And so you know that things are affecting the Tesla stock in a negative way because the price has gone down. And as a matter of fact, everything's so bad in the stock market right now. I made another video. You can watch that where I showed all the stuff that I sold off. A whole bunch of other people are selling stuff off too. And I just hung on to some of the Tesla in hopes that I can recoup some of my losses during the earnings reports. Let's get into this video now. I mean, well, we're in the video. Let's get into this Barron's report. Now, I want to give, for the parts of this video that contain the Barron's, some information from the Barron's article. I would like to give Barron's and Al Root, who apparently Al Root wrote the article. Let me see if I can confirm that. Like to give them credit. Yes, written by Al Root at Allen.Root Dow Jones. So the parts of this video that contain information from this article, I'd like to give credit to Al Root for that. Investors expect Tesla to earn more than expected when it reports its fourth quarter results after the close of trading Wednesday, which is today, because that is what typically happens. Predicting what will happen to the stock afterward is much more difficult. Now, I can verify both those points. That's been my experience with trading Tesla stock. And one of the things that's so great about this channel is I'm a regular guy. I'm not a financial advisor. I'm not a financial expert at all. I'm a regular guy that made his money getting burnt, bruised, and bleeding from nothing, and have had a great deal of success in investing that money in real estate and stocks and things like that. And so if you want to see what happens when a regular guy starts throwing money at the stock market, it's not always good, but I can tell you it ain't boring. So Wall Street, okay, investors, Wall Street expects Tesla, and this thing popped up in my way, which ticker symbol TSLA, will earn about $2.36 a share for the fourth quarter of 2021. Estimates have been creeping up since the company reported better than expected fourth quarter delivery numbers on January the 3rd. Okay, now those delivery numbers were phenomenal and just amazing and even better than expected. But that is a blessing and a curse on the stock price because the stock price already went way up on that news. So this earnings report won't have the effect of that news as much as it would have if that news had not been given out before the earnings report. So how much wind does that take out of this sail? I don't know, but certainly some, because we've already seen that happen, and it went up and went back down on the deliveries. So I wouldn't expect a big bump in the stock price about the deliveries because we've already had that. Now, I also agree that, Tesla's been beating in earnings, and it just keeps getting better, and I don't expect it to be any worse this time. Okay, the next part of this article, they say in late December, analysts were projecting less than $2 in per share earnings for the fourth quarter. Tesla earned $1.86 a share in the third quarter of 2021. It will take an earnings beat to get Tesla shares moving higher because most investors, not just people holding Tesla stock, expect better than projected earnings. Companies beat profit forecasts 60 to 70% of the time. Tesla has beaten Wall Street estimates 7 out of the past 8 quarters it reported. I think it'll take more than just a beat, because everybody's already expecting a beat. And like I said before, we have this huge umbrella, this dark cloud of negative catalysts pushing down on the market as a whole. And right now, especially on the tech sector and the kind of stocks that Tesla is. So a lot of people are selling and running scared. Anyway, to go on with the Barron's article, that outperformance doesn't always mean a rising Tesla stock. That's kind of what I was saying. I'm sorry. I apologize for I didn't mean to leave the phone on. That outperformance doesn't always mean a rising Tesla stock. I agree. Tesla shares have only gained 3 times the day following the past 8 earnings reports. The average move up or down over those quarters has been about 4%. Yeah, see, that doesn't really bode well. I mean, it's like, look out if it's kind of like they're saying, look out if we get a bad earnings report, it's going to be really bad. If we get a good earnings report, it's going to be meh or maybe 4%. Now I'm not sure. I can't see with this page, and I'm going to make another video, and I'm going to go over and reveal to you guys. There's a couple of new videos you need to be looking out for. One is I'm going to go over tomorrow how it turned out with the Tesla shares that I have and the effect of the earnings report tomorrow while it's happening. I'm also going to reveal to you how it's going with all the other stocks that aren't Tesla that I did sell with the market going down to avoid more losses, and let you know, each and every one of those individual stocks, what my losses were before I sold and where those stocks are at now, so you can see if that was the right thing, that selling out was the right thing to do or not. We both can see together whether those stocks continued to go down or not, and so we can both get an idea of how much more my losses would have been, or if it went back up and it was just a totally insane, stupid thing to do. and then you don't have to risk money to find out these things, because it's my money and I'm the one doing the risking. As long as you don't copy my trades, then you don't have to lose with me or gain with me. You can just see it in the high stakes game of me doing it. The outperformance doesn't always mean a rising Tesla stock. This is not financial advice. The outperformance does not always mean a rising Tesla stock. Now, okay, we read that. The average magnitude of Tesla earnings beats in recent quarters is about 25%. Okay, let me read that again because I'm not sure I absolutely understand that. The average magnitude of Tesla's earnings beats in the recent quarters is about 25%. Calculating an average performance over longer periods gets tricky because sometimes analysts projected a loss and Tesla reported positive earnings. There is no percentage outperformance when companies report an unexpected profit. Now, see, this is where some of my inexperience starts showing. I'm just a regular guy investing in the stock market because I'm not sure what they mean by that. I mean, it seems like what they're saying is that Tesla had an earnings beat, and then they looked at how much between that earnings and the next earnings, and the stock went up about 25% over the entire period. But don't quote me on that because I don't know what the hell I'm talking about. And then, it goes on to be about the longer periods. It's tricky because sometimes analysts projected a loss in Tesla reported earnings, and then in parentheses, there is no percentage outperformance when companies report an unexpected profit. Which, are they saying they just don't have a metric for that? I don't know. But, not only should I give credit to Barron's for, the stuff that they put here that's included in this video, but you should go check out this. Let me give you the headline so you can find it. The headline of this is Tesla's earnings day is here. This is the real number to watch. So if you want to check that out on barons.com and read the entire thing, that would be great. Give them some love for putting this out there to help us all out with some information. The 25% number can still be useful, though, for earnings to come in 25% better than analysts. Okay, so the 25% is not the stock price going up or anything. It's the earnings was 25% better than the analysts expected. So that's a totally different thing than what I was thinking. See, I had no idea that's what they were trying to say. That's why sometimes you need to read these articles in their entirety so you can learn enough of the terminology and how they're using it to be able to understand what they're actually trying to convey. Tesla would need a fourth quarter profit of about $2.95 a share. That would be a strong enough number to see the stock rise, unless commentary from management or some other factor raises concerns. Options markets imply that Tesla stock will move up 10% up or down following the earnings. That's a big difference. 10% up or 10% down. I mean, that's a 20% spread. That's woo. Like I said, I told you this is not going to be boring. We may not do everything right here. It may be totally insane, but it's not going to be boring. After the earnings are released, the company will host a conference call at 5:30 p.m. Eastern Time to discuss the results. Investors will want to hear what CEO Elon Musk has to say. Yeah, they will. And that will probably make more difference than anything else. He doesn't take part in every quarterly conference call any longer, but he is speaking Wednesday to give. Okay, whatever. Just read the rest of the article. this is starting to get boring here. And and I don't want to put boring on the channel. I want to respect you guys' time, and I really appreciate, and I'm very thankful that you're here watching this and listening to me ramble on and watching me lose money and watching me make money and all that kind of stuff. And I appreciate your comments, man. Some of you guys put some really good comments below the videos and stuff that I can learn from. It helps me out with the investing and stuff. And I also want to give now you may be, especially after, maybe if you're not upset and a little nervous after watching this video, you're certainly going to be nervous and upset after you watch my video about the negative catalysts in the market today. I haven't come up with a good, strong title for that video yet. So it's going to be something about the negative catalysts in the stock market. And so that, be looking for that. It'll be out within the next 2 days. I might even do it this afternoon. But certainly by the time you've watched this video and watched that video, you're going to need to go over to Bottle Cap's channel and watch his new video on relaxing ocean waves to calm you down a little bit. So till then, I've got to go, spend some time at lunch working out, hit those weights, get all pumped up, man, so I can sit here on my butt trading stocks for the rest of the day without getting all, I've already got some right here. Need to get rid of that. Anyway, thank you so much for hanging out here with me. And let's see what we got in the comments right before I go. Well, we're all caught up. So till the next video, I'd like to wish you all insane growth and insane amount of success.